The Hustle Share podcast is brought to you by AWS, the world's most comprehensive and broadly adopted cloud platform. Use AWS now to lower your business costs, become more agile, and for faster innovation. Apply now to get $1,000 free credits at hustleshare.com/AWS. Also by TagCash. Spend, play, earn, and build a mobile wallet super app for your startup. Go now to hustleshare.com/tagcash to apply and get your startup's mobile wallet. And Caliber is the easiest, most convenient way to get hired. Caliber tailor fits the perfect job for you based on your unique skills. Hire the best people for your company at www.caliber.com and use the promo code HustleShare. Caliber, where jobs find you.
Welcome to the second ever Hustle Share Playbook. My name is Ronster, and I'm your host. And this playbook is powered by AWS, the world's most comprehensive and broadly adopted cloud platform. We are a proud affiliate of the Podcast Network Asia, but before we begin, we'd like to remind you that this podcast contains a lot of adult language, so make sure there are no kids when you're listening to this. Because in this playbook, we're going to have, again, Mr. Magellan Petalino of Academe to discuss how to look for investors for your startup. And we're very lucky to have Mags again because this guy has raised for any type of investors that's already out there. And he's going to give us the cheat sheet of how he was able to make money and raise money from them. He's also going to share the check sizes and the range of money each investor can actually give you. And not just that, he will also share the best places to find them and what they look for in startups that they support. And we're not going to leave you hanging because we're also going to give examples of the type of investors and who they are out there so you can also approach them when you listen to this. So if you're ready to learn how to find the right investors for your startup, let's begin this playbook right now. Welcome to the second ever Hustle Share Playbook. We're already second and we still look the same. We went back.
No, I just love this shirt.
All right. Me too. This is my go-to, bro. Again, we're still with our guest on Playbook number 1, which is Magellan Petalino. Woohoo!
All right.
There you go. Again,
I feel like Kobe now.
Yeah, there you go.
Number 24.
No, you shoot like Steph, bro. You shoot from the
That's
from
right.
the
Yes,
fucking
I do. Yes, I do.
half court line. This guy I play basketball with him. He only doesn't shoot in front of the rim. He shoots, money shot all the time.
Money shot.
Money ball. Okay, so Magellan, just to provide some context again, Hustle Share Playbook was made to show you the step-by-step guide on how to do this. The normal Hustle Share podcast format is we talk about the journey and inspire. Here, this is your cheat code on startup life.
There you go.
So you can apply it on your own daily hustle, which is what Hustle Share is all about. So on the first one, we also had Magellan. We talked about how to fundraise, the structure of how fundraising, if you're interested about that, which is also connected to what we're going to be discussing today. But before that, Magellan, what's our play today?
Should we talk about finding the right investor for you?
Yes. Where are these investors? Who are these investors and where can you find them? In a Philippine setting.
There you go.
And all that. Okay. So, Mags, in the first one, you talked about structures and all that, which again, just listen to it. Go to the first Hustle Share. It's in yellow. You'll see it. You'll be able to find it. There's Mags there. There. He looks like a Spanish conquistador. That's him. Okay. First one, you did that. In this one, we're going to be talking about where do you find it. So there's also, let's just go back to the structures that you made. In the first playbook, you mentioned 3 formats of how to raise.
Yeah.
First one is equity.
Mm-hmm.
Second one is debt.
Yep.
Third one is mezzanine.
Yep.
Okay, equity again. This is where you give out your shares.
That's correct.
Are these guys the same people that you should approach for each ones? Let's talk about who and where these guys are.
Perfect. So why don't we start with angels, diba? Your
Angel entrepreneurs.
There
yes.
you go.
Angel entrepreneurs.
Investors. Angel
Sorry.
investors.
Angel investors.
Yeah.
Okay. Like Mark Vernon.
Yeah.
Tag Cash.
There you go. Love that guy.
Yes.
So, there's a lot.
Okay.
So I think this is where Philippines is most abundant on in terms of investors.
But you also gotta be careful of the devils, bro. There's also some flip side on these Lucifers and
the
whatnot.
Lucifers.
Okay,
That's
we'll
right.
talk about those ones you should look out for later. But okay, what are the angels? What are angels and what are the check sizes they do?
If let's say you're in the early stage of your business,
Okay.
You already have an MVP, you've figured out your product market fit, so everything's going well, and you just need, let's say you're not yet at the level wherein a venture capital is ready to invest in you, and let's say you need between $10,000, which is $500,000 pesos, to let's say 5 million pesos, diba? If you just need that money just to
Get things started.
ramp up your numbers further, diba?
Yep.
Kasi
Or hire initial core team, for example.
yeah, hiring your core team. So you can get that money from angel investors. So this is
So the range is 10K to around 50 to around 100K.
100K US dollars, diba? So kasi this is when and this is normal, diba? You just like try to get money quickly, so you want to prove that your business is working, so you approach angel investors. Usually angel investors, when you start raising money,
Yep.
the best place for me
Okay.
to find these guys is the good ones.
The good ones. How
The
do you
good
know
ones.
are the good? Is it the good guy? SMDC? The good guys that we're talking about? How do you know it's a good one? Because it's
The key term is patient money.
patient money. So
Patient money.
what is patient money?
Patient money is the type of money who's not gonna call you every other week to ask you how's business and where is my money. Yeah.
Correct.
Patient money is usually medium to long term.
What is medium to long term in terms of ROI? That's technically what they talk about.
Usually anywhere after 3 years. That's a good length. Kasi you have to remember, angel investors, the good ones, understand the risk they're
Right.
taking. So if you go to an angel investor and the first thing they ask is, okay, when are you gonna give dividends?
What the fuck? What
Or-
dividends in a startup? Why are you dividending? You should reinvest everything.
Then
Right?
I'm not saying that investor is bad. It's more of like
It's
maybe
not
he's
patient.
not the right fit at this
Sure.
stage.
Sure.
Diba?
He wants a flip.
exactly.
Yes.
Those investors are good for companies who already have like stable revenue and income.
Correct.
But if you're at a stage wherein you just finished product market fit,
Yeah.
you can't afford to onboard an angel investor who already seeks ROI on your first year.
Got it. So, and also these guys, the way you distinguish them is by default, they're high net worth individuals.
That's right.
So there's this one. So let's just call it out. I apologize if you have to call it out. So the ones that top of mind here in the Philippines are, again, Mark Vernon of Tag Cash. If you want to get a hold of how he is, go to hustleshare.com/tagcash. I'm giving you the keys, guys. I am giving you the fucking
the keys to the fucking heaven.
Exactly, with my blessing. So please fill up the form there if you want my help. No, for real. He does.
Yeah.
He's written so many checks.
He did,
right?
he did,
And
he
he is super patient.
Oh yeah,
Right?
that's right.
There's ones that are also that come to mind is the John Orax of
Yeah.
the world. These
That's
are the
right.
ones. But he is more structured in the way he does it.
Yeah.
Right? Who else are? You are an angel.
Kinda, but
Right?
not really.
Right.
Not
But you
really.
did some angel investments as
I
well.
did.
So from a point of view of an angel investor, just to put it on the flip side, what do you look for?
It's the first thing I look for, or I try to like figure out is I try to understand the founder.
So it's really founder driven too.
Yeah, it's ganun talaga eh. Kasi when you pitch a concept, it's not yet proven eh.
Yeah.
But if you believe in the guy,
what's your cred?
The credibility and the character of the guy, parang you'd be willing to make a bet on that person.
Correct. It's you feeling like the right juju.
Exactly.
Per se, like this is a good
juju
guy.
on the street.
Right, exactly.
Juju on the street.
They're titas. What the
I think my lyrics is even wrong. By the way.
Juju on that beat. Juju on the street.
Oh no! I'm an uncle.
Oh, it's all good.
I'm an uncle.
Tito Mags, it's all good.
Oh no.
Okay, so Max, where can you spot a right investor or an angel investor, and how do you get in the room with them? Because these guys aren't just like flaunting, and usually the good ones also don't flaunt. Because why would you fucking flex your fucking, I invest in fucking startups? That's already a red flag. How do you know it's a good one, and how do you get in the room with these guys?
Actually, okay. So how do you know if it's it's patient money? You've already said it. These are the people who don't seek attention.
Yes.
Diba?
Yeah, like a Nixon Ledo.
Yeah.
Boom. Perfect angel. It's so hard. It's like a fucking...
They're hard to find. They're like dragons.
Sasquatch. Yeah, but what's a pro tip? How do you get in the room with these guys?
You have to be in the right network. Diba? You have to be in the right circle. Exactly.
Okay.
Getting, like for example, just be in the same organization that they're in.
Like?
Have you heard of Endeavor, for example? Diba? There's a lot of good guys in that group. And they can really bring you to... They will bring you to the right people.
Correct. Because most of the right guys also are happy to pay it forward and introduce you.
They are.
But you gotta do your work first.
Yep, exactly.
Because I'm not gonna open a door and fucking stick my neck out with you and open like, what the fuck are you doing?
Exactly.
Yeah.
Exactly.
There's one too. Harvard OPM or
yeah, that's a program in Harvard. My chairman, JJ Atencio, took that program. And I've seen
those are legit guys.
Legitimate big entrepreneurs. Raj from Esquire took that program. Yeah,
oh shoot.
Yeah, he took that program.
Wow.
Esquire. There's a couple of guys, like big guys who went through that program.
How do you impress an angel?
Just be yourself. That's it.
Got it.
Kasi, di ba, again, going back to that concept wherein investors look at you as a person and your character, di ba? If you're stiff, you become like a puzzle to them. You're like, I'm not too sure about this guy. Something's wrong, di ba? I don't see his personality. I don't see himself.
Right.
Diba? Parang there's something's not right.
Something's off.
But if you're transparent, if you're honest, and you're very charm is a bonus. Diba?
Right.
Being charming is a bonus.
And that's also a blessing too.
And it's a blessing.
Yeah, correct.
But
not everybody gets it. Right.
But if you're just like real, that usually like solves half of it.
Okay, now what if someone's listening here and she has a very strategic business, for example, say a beauty brand, and whatnot, and like shoot, there's not a lot of angels and whatnot. How do you find the right angel, get the same kind of deal in a highly specialized, non-startup setting, and still achieve? Because, like for example, it's not alien to think that say a clothing brand, if you have a clothing brand, someone can write a $10,000 to $100,000 check, around a couple million. But again, what's a pro tip also that you can? So aside from referrals, if that's not in the table, is there anything that you can at least break the first door without that first help of someone introducing you?
You know what I would do is I join the industry association that focuses on your sector. Like for example, I remember when I was starting, one of the first groups I joined in was Finex. financial executives of the Philippines. Di ba?
Oh, there's a org
JFinex.
Yeah.
JFinex.
Shout out to UST.
Exactly.
STE, you're not affiliated with it. No, YES. That's the UST one equivalent.
That's right.
Young Entrepreneur Society.
So I joined Finex. So I met a lot of good people there.
Good looking
who
girls
are
too. Yeah. I hope.
We'll talk about that in another podcast.
Okay, let's see. Okay. All right.
But so yeah, because once you're in the industry organization, you start the big players in that industry. And when they become more familiar with you and they start becoming comfortable with you. And then not only that, you also start understanding the real pain points of the industry.
Got it.
And if you have your startup that can actually solve those issues, it's easier now to talk to the big players and tell them, boss, why don't you just invest in my company?
Got it. And you have that equity already because you put in the work, the time to network.
The network. And imagine, diba, that's very strategic kasi at the onset, you already get a strategic investor.
Got it. And it's already, again, they have that, it's not a hard sell anymore.
Yeah.
It's not a home run fucking Hail Mary thing because
Exactly.
you've already invested a lot of time.
You have to remember, when you fundraise money from someone, you're not gonna close it on the first meeting.
Nope. There's no such thing as a one-night stand.
Walang
guys.
ganon. These people need to know you.
And in order for them to know you, regardless of your business right now, you need to spend a lot of time
with
networking.
Yeah,
so I don't care if you're an introvert, extrovert, ambivert, whatever the fuck your vert is.
Yeah.
Sorry, but I'll burst your bubble right now. You have to go out and meet these people.
Exactly. Diba? Kasi, diba, usually when we refer people, outside of fundraising, when we refer people,
Right.
usually we refer the people we know.
Yes.
Like, if someone asks me, Uy, Max, who can I talk to about podcasts? Oh, pare, I know the right person.
Ray Ripundo.
I love Ray. We're
shut up,
good friends. Hey, Ray. Yeah. Diba? I'll tell them, I know Ron. Ron is the guy. Diba? Parang ganon.
Because it becomes synonymous to what your expertise is.
Exactly.
Now, if you want to be an industry expert, you need to be able to flex it in a way where you not just garner popularity, you also garner respect and street cred
of that industry.
Correct.
Diba? Kasi if let's say you can become popular naman on your own merits,
right.
diba? But if you let's say built yourself up without like any touch point with the industry you're tapping in, you'll be seen as an outsider.
Yes, and it's like, she's good, but I'll stick with the people I'm fuzzy
I know,
about.
Diba? Exactly.
Correct.
Exactly.
Okay, now let's talk about the next one. So again, coming from an equity point of view, VCs.
Right.
The Kickstarts of the world,
Yeah.
500 startups of the world, which again, there's also these are institutional investors. Majority of the time, the Paul Santoses of the world of Wavemaker, which again we've had on the podcast, so just dig it up. It's all there. If you want to understand their hustle and how they function, they usually don't invest their own money. They have LPs, limited partners.
That's right.
Which they garner and fundraise from in order to fund to another startup.
That's correct.
How do you get in the room with VCs? Because if angels are hard, guess what? There's a harder Sasquatch to catch.
That's right.
It's VCs.
Yeah.
How do you get these guys how do you get to be? They have this term. How do you become part of their radar?
Well, first you have to understand VCs and how they make money.
Okay.
So venture capital funds usually have like a lifespan.
Yep.
Diba? It could be 5 years, 8 years, 10 years, whatever.
Mm-hmm.
And they essentially commit an ROI to the limited partners. Now, we're gonna invest in these kinds of companies, and
sometimes there's a theme.
Yeah,
If it's
usually
a
there
fintech
is.
fund
Exactly.
or whatever fund,
social impact fund,
Yep.
And in essence, these funds expect you to grow their money by 3x, 5x, or whatever.
Okay.
So there is that expectation of growth. That's the
it.
keyword, growth.
Growth. So if angel money is patient money, what would you call VC money?
VC money is time-bound money.
There's pressure with
Diba?
it now.
There's pressure here, obviously, to really perform and hit like...
Yeah.
Kasi this money is not only time-bound, but requires a certain level of governance in running your business.
Of course.
Diba?
Right?
This is when you start putting structure in your organization. Kasi when you do your startup, usually you don't have that proper structure yet.
Right.
You have a small team, you're trying to save money, and most likely it's easier to approve things or like pivot or things like that.
Right.
So when you start talking to VC money, they expect you to already have to start implementing governance and structure.
Absolutely.
This is when protocols need to be set in place,
Processes. Right.
Efficiency, and at the same time, they expect you to really drive growth.
Correct. And they don't expect you to sit on that fucking money.
Exactly. The
Because
last thing they want is money in the bank. They want you to use that money. That's why they're giving it.
But there's a big ass motherfucking but.
Yeah.
You don't spend it like a motherfucker where you make it rain. You have to be strategic. And that's, again, I made that mistake myself.
That's
It's like, all right, I'm going to spend it. Fine. It's like, oh, let's buy growth. And that's usually the biggest pitfall. And you know, it's already a bad sign where you ask me like, okay, so what are you going to use the money? Marketing. Fuck! I'm not saying it's wrong. Well, where are you going to market if you don't have market fit? If you don't have a formula that scales.
That's right.
So technically, you're gambling the money to buy growth because you know you have product market fit if you do have traction that already grows itself without the need of further marketing to grow. Again, it's very dependent on your business model too. So please take my advice with a grain of salt. But most, like you guys, did you need to buy your growth in Accudine? It just exponentially also, it came with it. But if you wanted scale, that's why you raised for the money.
Because you can do it strategically. When you buy growth, diba? Sometimes, instead of like, for example, one way to do growth is to really spend it marketing, advertising, whatever.
But that's a gamble, bro.
That's a gamble. That's true. In our case, we were a bit... I feel like we kind of took a wiser route and the more cost-efficient route.
Which is?
Wherein instead of really spending on marketing, we built on partnerships, strategic partnerships. Like, for example, working with banks.
Pipeline.
Exactly.
Because, again, at the end of the day, whatever it is you're spending it on for growth, you want to get qualified leads.
That is correct.
Leads that can convert into a proper customer.
A real customer.
Correct. Now, if your ratio is if you talk to 10 people, you get one, that's a bad fucking ratio. That's social media game, technically. Right? Unless, no matter how fucking good you run your ads on, if you're playing that game, if you don't have a backdoor blue ocean strategy where you can get those leads en masse, you're fucked.
That's right.
You're going to burn that cash like the wildfires in Australia.
And the last thing you want to be right now is another one of those cash burning businesses.
Yes. Because there's only a few business models where it's okay to burn, but it's because you're ingrained, like a Grab, you're a Lazada, where you know and whatnot. It's not the metric is that, but because they have super motherfucking crazy hyper growth.
That's right.
That they affect billions and millions of lives at scale.
And the other thing is their backers really tell them that it's okay to burn money.
Correct.
But this is one mistake that a lot of startups really need to think about. They all think that all investors are like investors of Lazada and investors of Grab.
Good luck
Yeah.
getting SoftBank, guys. Right?
Yeah, there are. You have to remember you're in the Philippines, and
There's a Philippine discount. Paul talked about this. Right?
Exactly. So
Yeah.
you sometimes if you take a VC or if you get investors, they're not the type who would want you to just keep burning cash. They don't
True.
have the same capacity as Grab investors or SoftBank. Diba?
And these times also, gone are the days where people are willing to just burn.
The risk appetite is much lower.
Because they want a sustainable business.
The bidas nowadays are companies who are able to prove traction early on.
That's the holy grail.
Sorry, not even traction.
Profitability.
Companies, Prove
Not just revenue, guys,
profitability.
huh?
Sustainability.
Yes.
Yeah.
That in the end, it is not just built to be a startup of high growth,
Yeah,
but also a startup of sustainable revenue and profit.
exactly. So it's no longer like a first to market kind of strategy that people are looking at now. Because I think a lot of the models have already been tested. So now the real fight in terms of like companies is like, okay, who's the most sustainable? Okay, we've seen all the models. Who's the real sustainable players?
And also, that's what I like, because it's a mixture now of traditional Asian business perspectives,
That's
which
right.
is, roll over your profits as you grow,
Yeah.
plus with Western principles of pumping resources into a certain business in order for it to grow exponentially.
Exactly. Actually, ngayon nga I think the attractive businesses are we're going back to that Filipino-Chinese model.
The Chinoy model.
The Chinoy model. That's
Right.
fantastic. That's fantastic.
All right, now let's before we get carried away, let's take our break. So when we come back, let's talk further about who are the other guys that write these checks and how to get in the room and in bed with them.
Oh, yeah.
Well, let's talk about
There you
that
go.
more after the break. Hey guys, it's a brand new season, and I want to share you another brand new lesson that I learned through my 10 years of hustling as a startup founder. See, one of the biggest mistakes that early stage startup founders usually do is creating a product that they haven't validated and allocating resources based on hypotheses that they haven't tested. And don't worry, because I've made this mistake several times as well. I remember back in my first startup called Partyfile, I invested all my life savings to developing a website with a developer that I hired without validating anything. And guess what happened? Yep, it did not work. And now I was stuck with a website that nobody wanted to use, and I did not have the resources to edit the site and add more features that people actually care about. Now, luckily, there are a lot of sites now and resources that you can use to not make the same mistake. And one of them is Tag Cash. The beauty about Tag Cash is that it's already an existing platform that you can just replicate, especially if you have a fintech play and you want to build on the blockchain. So if you need features like deposit, spending, charging, transferring, disbursements, and all the way to withdrawing money, you can use Tag Cash to now validate your ideas very fast. Now, the cool thing is Tag Cash is actually looking for startups to support, especially those ones that support a certain community. One perfect example is Society 8, wherein before they used to write checks for all their merchants that they support, but now they do that automatically within the Tag Cash app that they have, and also they were now able to scale to over 24 locations. So if you're interested to start using Tag Cash in your startup, just go to www.hustleshare.com/tagcash and fill up the form and tell us how are you going to use Tag Cash to build your own super app for your startup. So again, that's hustleshare.com/tagcash, and you'll never know, you just might get your funding there too. Hey hustlers, let's take a quick break to discuss one very valuable and expensive lessons that I have learned through my journey as a startup founder. You see, back when I first built my nightlife app called Partyfile, I chose to be frugal at the wrong things and allocated my very limited resources on things like dev work without taking into consideration how users will use our app when we launch. And I was so enamored with the idea that once I got the app out in the App Store and people started downloading it, I won't have any problems anymore. And I was so wrong. Because it's already hard and super expensive to acquire users to use your MVP, and it's even more expensive to keep users in using an app that crashes because you chose to use the wrong service. Now, luckily, there's a solution to this problem that will not break the bank, which is AWS. The beauty about AWS is it's not just the most comprehensive and broadly accepted cloud platform where the world's most successful companies use it, it is also very startup friendly. Why? Because it has the most functionalities, so whatever you're trying to build in whatever architecture or language, it's certain that it's going to work. They are also flexible where you only pay for what you use so that your servers can also expand when you have that spike of users and your app or website will not crash. Now we're not gonna leave you salivating here without hooking you up to try what we're talking about yourself. We're hooking you up with 1,000 USD worth of free credits, that's 50,000 pesos, from AWS that you can use to build your tech there now. All you have to do is apply at hustleshare.com/AWS and fill up the form to apply to get your $1,000 free credits now. Okie dokes, let's get back to the show. And we're back from the break. We're still with Magellan for a second Hustle Share Playbook, and we talking about investors.
Yeah.
Right there. Okay, so before we took a break, we talked about two types of investors: angels and VCs, and how to get to do it. Before we just move on to the next one, how do you get in the room with VCs?
This requires you as a founder to research. This is like a different ball game. The best way to really get to these VCs is finding out which VCs are attracted to your vertical. So if you're in fintech, then look for those fintech funds. There's a lot. There's a lot. And I guess this is when, kasi VCs are very structured.
Right.
So even if you like just message the principals in LinkedIn, that's how you can go about it.
Right.
This is when like cold messaging actually works.
Okay. There's two hacks though that work for me that I'd want to share. First one, okay, it sounds fucking cliche and whatnot, but you have to find a way to stand out among the crop.
Yeah.
Right? And there's one way to do that. Win a fucking pitching competition.
Okay.
Especially in your early days.
Okay.
Because your ability to now pitch and be again on radar, be at that blip, toot, oh, who's that? They don't need to invest now, but you want to be in the radar so that they can see your growth. You want to be known. So winning a pitching competition, not to raise the funds or whatever fucking price in it, but to make that relationship. Hi, I'm Ron. Here's my card. Know me. I'll keep you posted. I'll ask for your advice. The other thing is also ask for advice. When you works for angels, works for VCs, always ask for advice. What do you think about my company? Here's what I do.
That's right.
You enable them to then give you that power to give advice. And then if you do act on it and you execute, it's like, oh, this guy is fucking coachable. Right? And then lastly, VCs. Okay, angels too. But VCs are also people.
That is absolutely correct. That's
you
correct.
need to talk to them like people. You don't want to be in that cream of fucking in a startup event where there's 100 people that pitch them.
That's right.
I fuck you not. They probably remember one or two are in there. You have to catch them where they're most willing to listen. Where are those? Happened with me. That's how I closed 500 startups in Party File. I did it in the after party.
Outside the boardroom, yeah.
Correct. The best deals happen in human situations.
That's true.
Correct. Because that's where you actually get to show who you are really and showcase. And again, without the rest of the pie because everybody will go home. Everybody won't spend that extra time to go to the after party and connect with those guys.
That's right.
Right? Oh, so if you're a master of pub, get your fucking poblacion on already because that's where they'll end up anyway.
That's correct.
Right? And have that chance to have a good 5 to 10 minute conversation with them. And if you click, they will stay more.
That's true.
Right.
I actually have like 2 more methods to really get in touch with VCs. Again, I would if I'm the startup entrepreneur, I would only raise money from a VC after I get to a certain scale.
Okay.
Diba? So at that point in time, usually you start making buzz.
Yes.
People start noticing you, then people start writing about what you do.
Yes, the PR.
And then the PR.
Yes.
The public relations. This is when
media.
Media plays quite a significant role because what happens is you start being placed on the radars of these VCs.
Correct.
And instead of you approaching them, they start approaching you.
Correct. Similar to the NBA draft.
Yeah.
You're now part of the top 100 draft class.
Yeah.
And they start scouting you.
Yeah.
Right?
It's profile building. You have to build profile.
Correct.
Yeah.
You want to be... That's why I don't hate on those motherfuckers that's all of a sudden are doing a media blitz.
Yeah.
They're trying to be seen.
Yeah.
It's strategic.
Exactly. It's strategic. There's a reason for that.
Okay, so don't hate on me. I just put in Aspire. Okay. No, I'm trying to be there again, right?
Yeah.
And whatnot. You know,
Exactly.
because and these guys search for you.
Mm-hmm.
And there's nothing to look at aside from your LinkedIn and your weird Facebook posts. That says something.
Oh, yeah.
Go Google yourself. What the hell shows up?
Diba?
Right?
Diba?
If there's articles like, oh, wow, this guy's top 30 over 30 and whatever, blah, blah, blah.
That's right. Yeah.
Oh, wow. There's some
Oh, this guy. Diba?
Yes. Again, builds cred.
Yeah, that's exactly. It goes back to that credibility.
Okay.
So, a good amount of PR would be nice.
Yes.
Now, there's another way.
Mm-hmm.
This is when you use, you call them like mga, what's the best way to describe them? Like brokers. So, there are organizations like, for example, PwC, PricewaterhouseCoopers. Diba? They're an audit firm, but at the same time, they actually has like a group within the organization focused on M&A and investments,
M&A.
wherein they link you up with investors
For a fee.
for a fee. So this is like the pricey way to do it, but usually it's very targeted.
Got it.
Kasi, and it's institutional level.
And it's also incentivized for them because they want to make money too.
Exactly.
Got it.
So if you want that approach now, you want to be low key, but you want access to like a targeted group of funds, you can do that approach.
But guys, again, there's a caveat to this, ha. There are people who front like this on a lower level. I call them charlatans. They're charlatans because they'll ask for you like, hey, I know this investor, but give me 5% if I fucking close it. Dude, why do I need to do that? At an angel level, you don't need this. At an angel level, what you need to be able to do is network and hustle.
And sometimes they're not even close, really.
Correct.
Really that close.
And they're
to
just
the
fronting.
investors.
Charlatans all talk big, do nothing.
Yeah.
So if you smell that from a mile away, back off. Find another way to get to that person
That's
directly.
right. That's
Okay.
right.
So you only this is only real game if it's a proper institution with like PwC with hundreds of years of experience.
Banks do it too.
And banks too.
Yeah, banks
Wow,
do it.
I did not know
like
this.
RCBC has RCBC Cap.
Wow.
UC, what's that? Security Bank has Capital. They have a capital group as well.
So they
BPI
broker
Capital.
really this.
Exactly. Yeah.
Wow, this is what you unlocked here, and that's what I want to ask more in the next thing. So we talk about angels, talk about VCs.
Yeah.
Who else can people raise from? And these are the banks and
Banks. Yeah.
How do
exactly.
you get in the radar of a bank, and how do you get Accudine level of billions of Bezoses? Again, let's break that stigma. In the first playbook, you said the Philippines is very, very, very liquid.
There's too much money here. Too much.
Where is the money? How come it's not out?
The money is scared. It's scared of risk.
There you go.
That's it. There's
It's
a lot
in
of
the La
money.
Casa de Papel.
Yeah,
Right
exactly. Diba? There's so many money, but it's just money that's scared.
And they'd rather be in a time deposit or whatever.
Exactly.
In there.
Exactly.
Depreciating over time.
That is correct.
But how do you get access to this? And how do you open this treasure chest?
Yeah,
per se?
Now, you have to understand that banks have, especially the big ones, they have like a group that focuses on M&A and also investments. Like they really assist in helping you fundraise.
Got it.
Remember, banks, because of their capacity to accept deposits from people, if there's one group who knows who the high net worths are, it's the banks.
Of course.
Yeah, they know how much money you have.
Right.
Yeah, so they know exactly who the real high net worths are.
Right. It's not the one that's flaunting his iPhone right now or whatnot.
That's right. Diba?
You know, these guys are super low key.
Exactly.
They're hidden in plain sight.
Exactly.
Yeah.
So if obviously that's one thing that banks can really leverage on when it comes to their clientele. Since they know who the high net worths are, they've built a service around that wherein they offer value add to these high net worth individuals by offering them investment vehicles.
Wow.
And this later on evolved na outside of kasi you have bonds, you have all of these other investment vehicles. It evolved to private equity. So because of that, there has been banks also started like offering these high net worth individuals investments in private businesses, either by equity, debt, or even subscription for a public listing.
Wow.
Yeah.
Public companies.
Yeah. Because again, diba, these banks, they other than it's up to the company. It's up to the business raising money.
Right.
If you think if you only want private equity, then they can provide that. But if you tell them no, I want to prepare for an IPO, a listing, they can also help you do that.
Correct. Because there's not too many people who's qualified to do capital markets like that.
Exactly. Diba?
Right. Okay. Now, how do you get in the bed with banks? So, okay, it was hard to do angels, hard to do VCs. Is it harder to do banks?
Of course. But if there's one common thing in all of those, it goes back to trust and credibility.
And reputation.
Yeah, that's it. Trust. It's all about trust, diba? Because these banks, they're not gonna sell anything to the high net worth their high net worth individual clientele.
It's risky.
That they're not comfortable with it.
Of course.
So, getting to work with these banks, you have to build first a certain level of reputation in the market, and also a certain level of traction for your business.
So if we're talking about problem solution fit in angels, product market fit in VCs, what type of metric are we talking about to get that traction hit for banks?
It's as simple as sustainability. They need two keywords: sustainability, proper governance.
How do you hit those, and what do you show to back it up?
You need to show that your business is actually sustainably earning money, diba? So dapat
Over how long?
At least 3 years.
Already?
Yeah,
wow.
at least 3 years.
But how were you able to do that in Accudine, given that you're not even 3 years old?
No, we're 4 years old now.
Oh, 4 years old, but you started raising from banks like year 2, year 1.
That's a different angle.
Okay.
I played the financial inclusion angle. Diba? Back in 2017, my strategy was to really have a good relationship with regulators. So,
Got it.
and also mga development organizations like International Finance Corporation, which is under World Bank, ADB, Asian Development Bank, diba? So by working with these guys, not only did it build our reputation in the market among banks, it also strengthened the comfort level of financial institutions to actually test out what we're doing.
Wow.
Because they saw, they started seeing that, these guys are like working with these institutions. Maybe it's worth taking a look.
So that was your litmus test.
Yeah.
Per se, like, oh, okay, there you go. It passed. Boom. Bam.
Exactly.
Green flag. I mean, green light. Boom.
Exactly.
Open the floodgates. Okay.
Exactly. I just stuck around with the right people and the right organizations. That's
So let's talk about that. So you said banks, VCs, angels. There's one type that also is one. These are the people that are looking to buy fucking companies.
Oh,
corporates.
I love that.
So I went through this in Chatbot PH, which again got bought by Sterling Paper Group.
Congratulations.
Thank you, appreciate it. And again, I still run it till now. It's a pretty good deal. Like I told you about this, right? But how you get in the bed with these guys? Because again, just like the elusive people that you know, again, it's hard to get them to even write that. Because some companies need to be at a certain state where they're willing to disrupt themselves already out of their current cash cow or whatever their model was to start investing into their future.
That's right.
How do you get into the bed with these, and how do you look for the right company to acquire you at that point?
It's all about positioning.
Okay.
If you let's say you're really positioning yourself for acquisition, diba?
Okay.
And you have like a few companies in mind.
Yeah.
You have to position yourself as in a way wherein you're solving or like you're gonna make it easier for that company to solve one of their goals.
Correct.
If you know the goals of a company, like for example, let's say this recent acquisition that Visa did.
Visa for
What's
Plaid?
that company? Yeah.
Yeah.
Is that how you pronounce it?
Plaid.
Not Plaid?
No.
Plaid.
So
Okay.
you know,
Fancy. It's very British.
No, it's like the checkered shit.
Oh, so
Right.
yeah.
I started saying played for the longest time as well. And then I met my fiance now, by the way.
Congratulations
thank you.
again.
All right.
Oh, yeah.
My fiance. And then I realized I was saying it wrong the whole time.
Yeah.
Apparently, it's plaid.
So it's like hippopotamus. Yeah.
Hippopotamus. But yeah, it's plaid.
Got it.
Yeah.
Got it.
Okay.
Plaid. Okay.
Yes.
So those guys, they position themselves
Yeah.
really well, wherein Visa kasi is, if you understand the Visa business model, those guys are like have very thin margins. This is the way Visa makes money is they need volume to make money kasi barya.
Right.
So where Plod position themselves is like, I think at a certain level, they, by buying Plod, Visa will be able to increase their bottom line by a certain percentage significantly, instead of like, so
Going 1:1.
exactly, di ba? So imagine if they for Visa, parang okay, let's just buy this company now.
Okay.
This is the impact to our revenue in the next few years. Within 2-3 years, we'll get the money we used to buy them out. Parang ganun eh.
And it doesn't have to be an acquisition straight up too. So there's another example that I've seen with Stripe and PayMongo.
Yeah.
So Stripe,
They invested
PayMongo, the PayMongo is trying to do what Stripe is already doing, but
Actually,
it's
same thing with Blood. Visa invested in them first.
got it. Then eventually, after it got big, boom, right there.
And usually, I think that's the best way to do it, diba? When you, for me kasi, these acquisitions happen either serendipitously or planned.
Correct.
And normally these large conglomerates,
Yeah.
like what happened to you, Ron, diba? They already have like a set plan in mind.
Right.
And normally they would bet on like small investments first.
Correct.
And if they see na, you know what? Let's buy them now.
Correct.
That's already one foot on the door.
Correct.
So it actually helps that you're able. It's the litmus test of the partnership.
Correct.
If they invest first, they'd be able to really figure out how to gel it out with you, and then once it's okay na, okay, Ron, here's the money.
Correct. And also in terms of perspective too, right? So that's absolutely correct. There needs to be a proper business case for them. And all people's like, how come Sterling Paper bought Chatbot PH? Here's just a little caveat of why it worked. Because Sterling has a very, very diverse portfolio.
Yeah.
And little do people know that they actually have a very big call center.
Yeah.
So who's the biggest threat to BPOs? It's AI. Hence the acquisition. It's very simple if you just make it work like that. Right?
I have another example in terms of acquisition. I won't name the names yet,
Okay.
but it's very close to my heart.
Okay.
But there's this company, and they are big on remittances.
Okay.
But they realized that because of this network that they were able to build around the
Right.
country, they realized the opportunity to expand to another horizontal, which is lending. They realized, wait a minute, we already control the value chain.
Right.
I guess
Why the hell not?
why not make more money from this network? So this is when they thought of this is when they started measuring whether do we do it ourselves, or is it cheaper to just acquire one of the players?
Got it.
Di ba?
Okay.
So usually the cost benefit analysis there is, okay, if we do it ourselves, we're gonna spend $5 million. But wait, there's this player
Who already has traction and everything that we need.
everything that we need, up for sale for $3 million. Maybe let's just buy them out.
Got it.
Yan yung serendipitous na mga situations.
Okay. Which again, there's always that connect with
Exactly.
the main business model.
Exactly.
So it's also good that you don't just completely alienate yourself and, hey, I'm gonna fuck y'all up. These are all our competitors. They're frenemies.
That's
Yes, you're
that is
competitors,
correct. That is correct.
but you're in the same industry. You still need to garner your respect from them.
That is correct.
Now, but here's the thing. It gets harder and harder to in each level, right? How do you get in touch with these people that run these types of institutions?
Because
the
very tricky.
Correct. And also the decision making as it goes high to the value chain. Angel, okay, check easy. So it's one person. VC, it takes a lot because there's due diligence, which again we can cover in a different playbook. Bank, more so. Good luck.
right.
There's so many freaking papers you have to. In a corporation, you're talking about a whole fucking corporation and the whole bureaucracy that comes with it.
Absolutely.
How do you even get to bed with these
Navigate
guys?
through that.
And how do you get champions within the organization to get that done?
I'll narrow it down to this. If you're gonna go via that direction, a top-down approach would work best. Kasi this is where you have to really talk to the decision makers,
Right.
have a relationship with them,
Right.
In whatever way you can,
Right.
and able to establish the possibility of being acquired by those guys.
So it's like doing the radar approach also.
Yeah.
With
You have to be in their radar. Like
Correct.
it's same thing with you, Ron, diba?
Right.
The acquisition happened because the guys knew you.
Yeah. And again, I had a very good white knight in the building who championed me inside.
Diba?
It was halfway sold already
There
because
you
the cred was there.
That's right.
Right. If you had a champion inside who can
That
literally
helps.
do this the selling for you,
Yeah.
you're already halfway through the door. All
Yeah.
you need to do is literally come in.
You need to have like let's say if you're trying to pitch to Duterte, you need to be close to Bongo.
Correct.
Yeah, parang ganon.
Or Panelo
Yeah,
or
yeah,
whoever.
yeah, diba?
Because straight up, even if you say the best fucking pitch in the whole world, if you go straight up to Digong,
Yeah.
dude, who the fuck are you?
Exactly.
Right? Why will I listen to you? Sometimes people, and regardless of what level, it's not what you say, it's who you know.
That is absolutely true.
That's it.
And
So
oh, wait.
network. Yeah.
Who you know and who knows you.
Correct. It's reciprocal, ha? Don't throw out random
Because
names.
some people, they just say, oh, I know this guy and I know that guy. Oh, wait. Do they know you?
Exactly.
It's exactly.
You need to garner that respect.
That's correct.
Unfortunately, damn, we have ran out of time. Thank you for this play. But again, Mags, we did 2 awesome playbooks on this one. I'm pretty sure this is not the last time we're gonna have you here. We're gonna have you for more playbooks.
Of course.
But you gotta go home. I gotta go home. We got some grinding still to do. But Max, before we go, where do they find you? And if they do want to reach out with Accudine and whatnot, where do they do that?
Well, you can check out Accudine.
Yep.
The website is www.accudine.com.
Yep.
If you want to check that business. But you can also check me out in LinkedIn.
Yep.
If you want to. I also have I write articles in Manila Times.
Yes.
I'm just not active recently. Just been really busy.
See, just look it up. He's
Look it
had
up,
written so many
Yeah.
good ones already.
Yeah.
Yep. And what? Okay, thank you again, Max.
There you go.
Appreciate it.
There you go.
All right, and again, before we go, if we did say any type of jargon that confused the fuck out of you, all you need to go is go to hustleshare.com.
Yeah.
It's all going to be there. And if you do want to get a heads up of who's going to be in the playbooks, in the next playbooks, and what you actually want to learn, let us know. Go to Hustle Share Community on Facebook. And don't forget to message us on the Hustle Share chatbot on m.me/HustleShare, powered by Chatbot PH. Again, Max, thank you very much.
Shesheni.
I have no idea what that is.
Kapong
but,
kap. Kapong kap.
Okay. This is so weird. But again, I'll see you guys in the next playbook. Peace.